Hello, this is your Professor Mark Gershman, and the purpose of this video is to review why your syllabus recommends prior accounting knowledge for this class. And in that vein, I'm going to ask you to consider watching this video twice. The first time you watch this video can be prior to buying the textbook or even installing the QuickBooks software. Simply confirm that you're comfortable with the level of accounting knowledge that you need to be successful in this course. Now, the second time you watch this video should be after you purchased the textbook, installed QuickBooks, and know how to open a QuickBooks company file. What I'm going to want you to do in that case is to follow along on your computer and reference the pages that I note in this video. So the basic accounting equation is assets equals liability plus equity. I think of this like a piece of playground equipment. Seriously, like a seesaw, a teeter-totter that always must be in balance. So these three items, assets, liabilities, and equity, are referred to as account types. An asset. An asset is what you have. For instance, you may have cash, you may have a car, you may have a house. Liabilities are what you owe. So you may owe money on your car. It's called an automobile loan. You may owe money on your house. That would be called a mortgage. Equity is what you own, and what you have isn't equal to what you financially own because you may owe somebody else money for what you have, right? So, using this example, I may have a house that was purchased for $300,000, and I may have taken out a loan, a mortgage, for $200,000. So that means that I own $100,000 of my asset, the house. These account types, assets, liabilities, equity, they have normal balances. So assets have a normal balance of a debit, while liabilities and equity have a normal balance of a credit. These three account types make up the fundamental accounting equation and are present on a financial statement called a balance sheet. So the balance sheet is an example of a financial statement. The profit and loss statement is also an example of a financial statement, and financial statements are a result of the flow of financial information that all starts with transactional activity. So at the top of the hierarchy that you see over here is transactional activity. And transactional activity is the result of some financial decision. Like, I might decide to borrow $1,000 to purchase a computer that costs $1,000. A journal entry then makes sense of transactional activity so that it flows to the financial statements. So the journal entry for this transactional activity would be a debit to the asset called computer for $1,000 and to credit a liability for a computer loan for $1,000. Every piece of transactional activity is stated in the form of a journal entry. So there's quite a lot of detail when you consider all of the financial decisions that are made in a chronological order. Luckily, you can use your accounting knowledge to get QuickBooks to automate all of this for you. So this journal entry, along with other journal entries, is summarized in the general ledger. And this is what accountants call posting to the ledger. And QuickBooks automates this posting process for you as well. And this summary from the general ledger flows to the trial balance, which is proof that our total debits equal our total credits. And this is also automated by QuickBooks. So the seesaw is always in balance. After the trial balance, QuickBooks automates the preparation of the financial statements. So the first financial statement is the income statement, and that's known as the profit and loss statement in QuickBooks. And that notes our income and expenses, providing us with a net income amount. And then the balance sheet, which notes the ending equity, and that includes the net income from the profit and loss statement. And we take that equity and we add liabilities to it, and that equals our assets. So the remainder of this video is going to take place in QuickBooks, where I'll be referring to Appendix A in your textbook. If you don't have the textbook yet and you don't have QuickBooks installed yet, that's okay. Just watch this video now, make sure you're comfortable with the accounting knowledge that we discuss, and then when you do get your textbook and you do install QuickBooks, I encourage you to follow along so you can see how all of this comes together.
The remainder of this video will be in QuickBooks, where I'll be referring to Appendix A in your textbook. And you only need to remove the shrink wrap on your textbook the second time you watch this video, after you've confirmed your recommended accounting knowledge and your desire to stay in this course. And I really hope you do stay, because QuickBooks is powerful software, and you need to have accounting knowledge to set up that software. Of the information we've talked about so far, Appendix A focuses on the trial balance, profit and loss statement, and balance sheet. I've opened the company file called Average Guide Designs. You'll be working with Average Guide Designs throughout the Develop Your Skills exercises in the textbook. It's also designed to be used for Appendix A. And if you're at the point where you've already installed QuickBooks and opened a company file from your checklist, go ahead and follow along by clicking on the Reports menu option and then selecting Memorize Reports, and you'll see 4 QuickBooks reports. Let's start out with the balance sheet. This relates to page 491 in your textbook if your textbook is currently open. Notice our total assets are $42,311.68, which equals the total liabilities at $8,183.23 plus equity of $34,128.45. While you're looking at this balance sheet, let's remember that net income is adding to equity of $11,313.43. Okay? So, in addition to the balance sheet, the author has also produced a profit and loss report, an income statement, for January of 2023. I'll open this report now, which relates to page 492 of your textbook. Now, while this report is proper and showcases income and expense, I'm not fond of this example on page 462. Why? Well, we can see it is for the month of January in 2023, and I'd like to see the full year and tie it out to the balance sheet that we looked at on the previous page. So I'll run this same report, the profit and loss statement, for the full year, which is also memorized, although it's not pictured in your textbook. And we can see the income, we can see the expense, and we can see net income of $11,313.43, which flows through to the equity section of the balance sheet. Now, both these reports, the balance sheet at December 31st, 2023 and the profit and loss statement for the full year of 2023, come from the trial balance for the year 2023. which we can see by running the memorized report called trial balance, where total debits of $54,965.11 equals total credits of $54,965.11. The structure of this trial balance matches the image in your textbook, although the author inserted an image with different total amounts. You could take the trial balance I produced and tie the totals to the two financial statements, the balance sheet and the profit and loss statement. And if you're the sort of person who likes to investigate, you can even double click on an amount to drill into the reverse direction to the general ledger. But hey, that's just extra credit at this point. When you're done reviewing Appendix A, you can click on the home icon to return to the home page and continue to work with the welcome checklist.